Good morning, good morning, good morning. We are live. It is Friday. That's right, Friday the 7th. And today looks like a green day on the market. We had, what report did we have come out today? Let's see if I've got that on one of my charts. Oh, see, stuff's filling already. Orders are closing. All right, what's today? Today is the 7th. We had employment, unemployment. Let's see, non-farm payroll came out at 8:30. Yeah. And so let's just take a look. I pull this up in Forex just because that's the one that I use. But we're looking at the 8:30, not the Canadian, but the U.S. Let me see if I can just filter that for U.S. only. There's a filter here somewhere, I am sure. All right, let's just filter this for U.S. And let's look at it. So hourly earnings were down. This looks like a negative non-farm payroll change. But I guess there was some cuts in the labor force, in the federal labor force, which is what it was. And then unemployment rates are down because people were leaving the labor force. So overall, while this looks either good or bad, it did drive the market up this morning. So it drove up the market, it drove up metals. Silver was up. If you can hear the dog, let me close the door. We are dog sitting and the dog likes to bark. All right. So that drove the market up this morning. And we'll just look at silver spiked up, gold spiked up and is holding a little better than silver. QQQ spiked up pre-market and then pulled back, as well as we just run into here the futures, the S&P futures here. This MES is the mini S&P futures spiked up, pulled back, but they're going to hold, I would assume, higher today. Volatility, this is the VIX. It's interesting. It opened down and then grew back on the volatility at the 8:30. You see this green candle ended up closing up a little bit, but we're still at a lower VIX of 15, the volatility. So that is what I'm looking at. And I'm going to answer a question from yesterday that was posted. I don't know if it was posted during the live or I missed it, but so Brent asked why I take trades that are further out. So what I do is I take a trade, quite a few trades will be 6 weeks out. They're lower, the reason they're lower risk, and this one right here, we're looking about 45 days out, and I should have a closing order on this, but I don't. Oh, that's Google. Let's just go to, that was a covered call I sold. Let's go to QQQ. And what just happened? I got logged out. We'll log back in here. All right. That's interesting. Okay. So QQQ, what you'll see is I have some trades that are further out. We've got the call that we pushed out. We've got the put we traded yesterday. And then I will trade some trades out 42 to 45 days. And my goal is to manage them at 51 days. I'm sorry, at 21 days. And the reason is because when you push things further out, while you do collect a less premium, it's less volatile. And at 21 days, I still have enough value left in the option that I can close it. So in this trade, already the market's up. But what normally I'm going to trade at, say, 7 days out, I'm going to trade the 16 to 7 or 16 to 10 delta So right in here, one standard deviation out, I'm going to look for the delta, and I'm going to look for 16 to 10. That's kind of my range. So in this, and I personally look for divisibles of 5 because there tends to be more liquidity there. As you get closer, it's not really necessary. It's just something I started doing. And the open interest, I don't know if I have, let's see if we can add open interest on here. All right, so what you'll see is the open interest at 700 is 7.67 thousand contracts. The open interest at 699, 267. And so when I looked at this, and I don't leave it on there, but when I looked at this, what I noticed was at the divisibles of 5, there tends to be more open interest. That means there's more contracts open. And look, and the reasoning, when you go further out, like here, let's go 70 days out, what you're going to see is as you get further out of the money, this might have been a bad example. Okay, as you get further out of the money, they jump to $5 spreads. And when you go further out in time, let's jump as far as we can. All these are $5 spreads right here. So there's just more open interest, more money to trade at those levels. Now, having said that, if we look here at 7 days out and we go to let's go to the 16 delta, we're at 701. I'm going to roll down to 700. If we go out 42 days or 49 days to that same, and why is this is not populating correctly? It should have my brown ruler in there, but it does not. But we go out to say the 15 delta, I'm at 663. So I would go right here. 665 would be if I were to make this trade today, and what you'll see is more open interest at 665 than at 664, 666. But I would go 665 and I'd go 40 wide. So 625. So sell the 665, buy the 625. We're risking 4,000 minus the fee collected. So we're risking 4,000. This says 336. I treat it as 4. If we treat it as the 36, we're collecting max profit of 300. So we're getting paid 308. And we're putting the buying power effective as 3687 or 4,000. I do it as 4,000 because that's the buying power minus the fee we collected. We'll call it for this 3687 right now. So that's 8%. That's actually a really decent trade right now. That's 8%. If I did the same trade for a week out on the same numbers, like on the same delta numbers, so a 40 wide at a 16 or 15 delta, I would collect less premium, but it's within 7 days as opposed to 6 weeks, right? So this would be 760. And in that case, I'm risking the same 4,000, in this case 3825, to make 172. Which is 4%. So it's a lower percentage, but it's 6 times faster. So this is a higher risk trade because I'm a lot closer to the money in general, but I make 4% in a week versus 8% in 6 weeks. Now, I'm going to set this to close early. So my target really is going to be 1% to 2% in the week on this. But that is what I'm looking for in general on this. And so I balance it with longer range trades and shorter range trades. If I was running a larger account, I might not do that. But really, this hits the numbers I want to hit. So in this case, with the volatility, QQQ's volatility, and what are we going? We're going up still, but QQQ's volatility is up still at the 53 IV rank, lower further out, and here we've got our brown ruler and there, our implied move, it loaded, but the numbers have moved up a little bit. I would do, yeah, I can still run this 665, 625, 311 in premium. Let's see if we get filled on that. We'll give that a chance to get filled and we'll come back to it. And then my 7-day trade is the 700, 660. So sell the 700 put, buy the 660 put for $1.75. And we're going to set that one to close at 75 cents. So we're automatically set to buy that back if it gets down to 75 cents. Good till canceled. I always forget that. And so basically we're putting 4,000 total at risk. We already got paid the premium, targeting $100 in profit, 2.5% profit for the week on that 4,000. And that right there is $100 of my target $200 for the day. Check in on the movement today has been good. The market's up. We're up 1,500, and I still have plenty of buying power to make another trade. So I always want to watch that buying power available and make sure that I'm not getting close where a big move in the market causes them to cut me out of something. Let's just run through and look if anything needs to be managed quickly. So this trade is now 14 days out. Bonds bounced up this morning with the news, and as you can see, we're back to where we bought it. No big deal. We're just going to let that keep working. We had sold a call. It closed when it dropped. Now we're in puts. They are moving up in price. This one's set to close. It's at 16 now, set to close at 12. This one's a little closer, still out of the money, but that's fine. Those, we're just not touching them. We're just letting those run. AMD, sold the naked put in AMD at 360. We're up $105 in that. It's been open for 1 day. I have it set to close at 250, and we're right at 410. I think we're gonna, that's a really wide bid-ask spread there too though. Let's take a look. I might try and, okay, got filled in that one. We're gonna jump back to that one at 313. I mean, $100 in a day profit, if I could close it at 410. Let's just set this 410, 370. Let's try and buy this back. So basically, I could still make another $400 on this, but I made $110 in a day. I'm looking at going another 7 weeks to make $300. And my thought process is I made $100 in 1 day with the $5,800 market cap. I made 1.7% in the day on this trade. I think we just de-risk and get out of it. So let's see. We sold it at $5. The spread is 370 to 410. I'm going to try and close that at 390, right in between. That might have been too easy as it moved away from us. But, so $110 in profit in a day, in and out, we're good. Let's see what else we've got going on here. Amazon, we're letting Amazon roll. Google, covered call on that. We're letting Google, so it's up and down. Google's been crazy. We're going to let that one go. Robinhood, Same thing. We sold the put on that. It is really close to closing on its own right now as it bounces up. Robinhood bounced up. We were going to come back to QQQ. We're going to run out to this trade that we made. It was 313. We're going to buy to close the 665, sell to close the 665, buy to close the 625. It's already in money, but we're going to set that at, what do we do, 313. We're going to set it at $1.13 with the target of $200 in profit. And so the numbers on that with our target of $200 in profit on $4,000 risk is 5% in 6 weeks. So it's a little bit under what we're making on the other stuff. And that, let's just run through the rest of the positions, but that's all my trades for today. If you guys have any questions, I know there's a little bit of delay on here, so I'll run through the rest of the trades if you guys have any questions. Silver's up. Oh, I might be able to trade this. Sold silver at 70. Let's see if there's a silver trade to be made for September 18th yet. I'd like to sell that covered call at 70. It's holding, so it's taking, the buying power that's taking is $1,400 in buying power to hold that position. And if I sell that, I'm going to pick up 84 cents per share, or $84. 84 divided by 1,400, 6%, 6 weeks. Now I can do, I've had to wait a couple weeks for silver to bounce up, but I'm going to go ahead and try and get in right at the middle there. Sell that call. If it gets called away, I'm okay with it. If not, then we'll just keep rolling that and make money as long as it stays into the position. If you remember the other day, it was like 4 cents. Silver bounced up, so we'll go ahead and take that. If it bounces down, go the other way. SpaceX seems to be on the rise today. Got the 125 and the 135 call in. Nothing to do there. We'll just let those ride. And we opened the S&P 500 trades. I tend to trade. This one is one I trade out further, that 6 to 7 week out, 45 days. And then I've got the 5-day. Those look good. Just working towards the expiration. And last but not least is Tesla. I've got the 295, 285, so $1,000 cap. It's about $40 in profit. It's out to the 21st. We got about $25 more we're targeting on that. As Tesla goes up again, that should close. That is all of my trades, and I see no questions. So hopefully I answered everyone's questions, and that's all I'm doing for the day. So I will be back on Monday, and if you have any questions, feel free, throw them in the chat or ask a question, and I'll look at it when I jump back on.